Gold. What has gold done, right? Gold, look at gold, going back to 1990s, right? Wonderful, nice and steady. But the topic of this segment is going to be, if you had gold, if you invested in gold, should you sell it? Right? Because gold is also, it's volatile, not like Bitcoin, don't get me wrong, but it has its ups and downs, although it's mostly steady. But since 2008, what happened in 2008? Okay, in 2008, we printed for the great financial crisis, because you could just look at this chart actually and kind of feel what your pocketbook is feeling, with inflation involvement, right? So in 2008, when the massive QE came in and we cut the rates to zero and we kept it there, what did gold has done? Gold has done really well, right? It was $800, went to $1,800, and then had a correction back to 1,000, back to 2,000, back to 14, 15, it was 15, 1,600, and now it's taken off. We're at 25, 2,600. Why? Gold is a good inflation hedge. To a point, not as good as real estate probably, but gold is a good inflation hedge. But the way gold is, attached, what is it attached to? Obviously, QE, QT, interest rates make a huge difference. That's why gold is a decent inflation hedge, and you should own all gold. But at this level, now you could be a buyer and holder forever, and you would have done really well. However, if you're a trader, would you sell gold now or would you buy gold? At the moment, what I would do is I would be a seller of gold. Why? I'll explain in a minute. And is it going to crash? No. Where is it going to go? Probably down to 2,000. And that's a $500 to $600 move. That's pretty big. But if you're a buyer or holder, hold gold forever. My portfolio, I have 5 to 8% of it in gold. I've had it for a while in my long-term investment portfolio. I will hold it. I will not trade it. But if you're a trader, right, I would sell gold at the moment. I'll give you a couple of reasons. One, we're cutting interest rates. Okay. Why are we cutting interest rates? Economy is slowing down. Inflation is going to go down. And the effects of inflation on gold may not be as high as, the previous 3-4 years, right? That's one. Number two, when we cut interest rates, obviously lower interest rates are okay for gold, okay? But the other thing that it's going to do is that it's going to affect the US dollar. The value of the US dollar, there's something called the dollar index. Dollar index is comprised of 6 currencies: euro dollar 57.6%, Japanese yen 13.6%, sterling pound, the British pound 11.9%, Canadian dollar, Swedish krona, and Swiss franc. That's the basket that the dollar index is made of. And this is the dollar index going back, the same time period as gold, right? So as you guys can see, when the dollar index is going down, that means the US dollar is losing its value against other baskets of currencies. We need to be careful about this. And this is also part of what happened with the carry trade between us and Japan. So please, just, hear me out for a minute. When we cut interest rates, when we raise interest rates, as you guys can see, it happened in 2021, the dollar gains value against other currencies. Every time we have raised rates, the dollar gains value. And when we start cutting rates, the dollar loses its value, right? And when the dollar loses its value, that means, we're cutting rates because inflation is slowing down. It may affect gold negatively to the downside. So the bottom line is, would I buy gold today or would I sell gold today? Today, I'll be a seller of gold and waiting for maybe 22,000, 1,800 to 2,000 level to re-enter if you're a trader. But if you're a long-term holder, gold has been a wonderful asset for you. Since in 1996, gold price, or 2000 actually, let's go to 2000. In 2000, gold was about $300. Okay. Today, $2,600. What is that? That's massive. That's over 10. It's about 10x, right? What asset class has done this well, other than obviously Bitcoin? At 12,000%, but 10x is awesome. And you would have protected yourself from inflation. So those are the topics. And the dollar index, I have an expectation of the dollar to go lower because we're going to cut interest rates. Although it may cut the carrying costs for U.S. gold, physical gold holders. By the way, you can buy and sell gold through an ETF called GLD, Gary, Larry, David. That's the way you can invest in gold. You don't have to buy the pound of gold or physical asset and put it in your safety deposit box. As we know, there's an ETF for everything these days.